You think the Fed's doing things wrong, the easy money is going to be bullish for precious metals, or you think the dollar is just going to disappear because it's just paper. Whatever your reason is, if you're bullish on precious metals, you have to be uber bullish on silver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today we have part 2 of my interview with Louis James of The Independent Speculator. You can see his website right there in the background. A lot of great research, and it was a great interview. Yesterday he covered uranium. Today we're digging into silver, so hit that subscribe button. And with that said, here we go. Another asset that I talk about a lot on the show, and I know you dig into, which is silver. Another one where we've historically, when the price of the underlying moves, we've seen some of those miners do extremely well. For folks who may be not as familiar with the concept of how you get some leverage on the price move of silver if you're holding a miner, could you maybe walk through how that works or a simple example?
Sure. I'd love to talk about silver. It's actually possibly my favorite metal right now. And the beauty of it is, we're clearly in a new precious metals bull. But if you look at gold prices, plus or minus 1,500, it's not quite double that famous 1980 peak, but in that neighborhood. Whereas silver is trading for less than half of its 1980 peak. So if you're, for whatever reason, right, you think the Fed's doing things wrong, the easy money is going to be bullish for precious metals, or you think the dollar is just going to disappear because it's just paper, right, or the world's going to, Bitcoin is going to destroy the fiat currencies of the world. Whatever your reason is, if you're bullish on precious metals, you have to be uber bullish on silver. In the first place, it's just a better deal. It's not that I think gold is expensive, not relative to where it's going, but silver is 4 times cheaper, relative to past peaks than gold is now. And if you look at the gold-silver ratio, of course, that's way out of whack. Now, that doesn't prove that silver has to go up. So gold could come down relative to silver, and that gap could close. Or it could be that, 80 to 90 ratio could be the new normal. Who knows? We don't want it to be that way, but Mr. Market doesn't care what we want. He responds to buyers and sellers setting prices. But what I'm saying is, if you're bullish for whatever reason on precious metals, it just makes all the sense in the world to gain extra leverage on silver because it's relatively cheaper, and we all know it's more volatile. When we've seen this all year long, gold goes up, 0.3%, 0.5%, has a great day, it goes up 1%. Silver goes up twice, 3 times, 4 times as much on a percent gain basis. It happens all the time. And if you look historically at silver prices, they typically lag gold to begin with, and then more than make up for. Again, on a percent gain, all the big bull runs we've seen in the last decades, maybe decades ago is a different world, but even the recent ones, silver outperforms gold. It's more volatile, it goes up more.
Yep. And for the silver miners, maybe you could walk through how their cash flows and profitability changes at a much greater accelerate, just like how silver relative to gold, you have leverage, how then the miners, you have further leverage there.
Yeah, well, I think that's maybe related to actually I have 2 answers to that. One is, since silver is relatively still cheap compared to gold, hasn't risen as much, a lot of the miners are still marginal. So when you have a company that's making $1 an ounce, and the ounce of whatever it is goes up $1, their margin just doubled, right? So, and that's much easier to happen with silver than gold right now. So there is that dynamic. But I think the bigger and more important thing here is that most silver is produced as a byproduct. And yes, we all know that, there really aren't any pure silver mines. Occasionally metallic silver will occur, but you're usually looking at a galena deposit, which is lead sulfide, or sphalerite, which is zinc sulfide. These are most so-called silver mines are really lead or lead zinc mines with a very strong silver credit, where the silver is more valuable than the other minerals. But there's still, most of the metal there is actually not silver. But even that is a smaller portion of the amount of silver produced globally than the silver produced as a byproduct of the large copper mines of the world. I mean, these gigantic, mountain excavations that they make, turning mountains into valleys, Even a small silver credit to these gigantic projects produces vastly more quantities of silver than the high-grade silver, lead, zinc mines of the world. And of course, silver is a byproduct of many gold mines, hence the rise of silver wheat and now wheat and precious metals. So this is very important for investors to consider because it tells us several things. One is the supply can be pretty inelastic compared to demand or price, right? If the price of silver goes up, but most of the silver isn't coming from silver mines, it's coming from copper mines, then those aren't going to respond to higher silver prices at all. They'll be happy to take the credit, but they're not going to ramp up a billion-ton production scenario at a copper mine because silver is $1 or $2 more per ounce. And that's a good thing, because what it means, if prices go up and supply doesn't respond, right? Supply stays down here, even if prices go up, well, that exacerbates the price rise. It really can light a fire under silver. We have seen times where silver seems to go off on a mini mania of its own. Like, gold prices, silver prices are rising, and suddenly silver just takes off. This happened in 2010 before the big peak in gold in 2011. It happened back in 1980 when the Hunt brothers tried to corner the market. And we've seen some smaller versions of this in between. I haven't conclusively, this is ongoing research here, breaking news for your viewers. I haven't conclusively found a formula or proof for what will predict when silver will go into one of its mini manias. We just know that they happen sometimes. My feeling, my impression from looking at the data, this is heuristic, not algorithmic, as we were just discussing off camera. My feeling, though, is that when you have an environment of rising precious metals prices, but you have an environment of negative economic news or turmoil that puts a kibosh on industrial metals, well, then you have this supply and demand imbalance with most of the miners not ramping up silver production to meet higher prices or to respond to higher prices. I think this is the environment that doesn't always, but can lead to one of these silver manias. And that's our current conditions. We have slowing in Europe, particularly in Germany, is very important at EU. We have slowing in China, and it's not just the trade war. And we have all kinds of recession signals, not just the inverted yield curve signal in the United States. I'm not saying that, the world is tanking now, but it seems clear to me that, as Ray Bradbury said, something wicked this way comes. And that's the perfect storm, to use that much abused phrase, for silver, that supply and demand imbalance we've been talking about. So I'm not promising your audience that we may have one of these silver manias in the near term. I'm just saying the circumstances are right for one, and we could. And if it does, hold on to your hats. Those silver stocks are going to make you very happy.
Yeah, it's really appreciate you mentioned that, because it is a unique set of circumstances where, in my opinion, the economy is weak. It's being propped up by money printing. So you have the weakness. How are they going to respond with more money printing? So certainly that's one of the reasons I'm excited about silver. Tail end there, you mentioned how, I think you were referring more to the primary silver miners, that those will do well in that environment. We hear people often mention 5 or 10 baggers, and I have a quote here from Doug Casey's book, if we can see that in the camera, back in the 1980s. And he mentions here, from 1962 to 1968, the average penny silver stock moved upwards over 150 times in price, which, that was even really before we had the big move, but kind of, with, which one of our emperors was, what's his name? LBJ decided no more silver in the coins. But that really stuck out to me. Geez, some of these penny stocks on that type of move, 100 to 150 times. So again, I don't want to get you or anyone in the audience in trouble by going overboard. But are we going to see, when you have $25 silver, or if it gets back to 50 or above 50, what do you expect from some of these miners in that type of environment?
Sure. That's the forward-looking question here, where I'm supposed to wave my arms. It's this big. It'll be this high. Let me try to give you a more responsible answer there. And fortunately, it's still pretty exciting, I hope. You remember First Majestic Silver in 2016? That stock just soared. I don't remember. It was like 400 or 500%. And this is not a penny stock. This is a multi-dollar large, by silver standards, silver producer. And in that rally in 2016, which unfortunately faded, but it was a strong rally, boy, that stock gave you a high multiple to the increases in the underlying commodity. And this is no penny stock. So that's actually, very good news. I'm not necessarily saying people should rush out and buy First Majestic, though I would say in the next rally, it's a stock that clearly responds to silver prices. So if all you want is leverage to silver, that or any of the big silver producers will give you leverage to silver. I'm not going to pick any favorites there, but all of them are a relatively safe way. If they're profitable silver producers now and silver prices go up, any company that matches those criteria is a relatively safe way to get leverage on those higher silver prices. Right. Now, of course, if you are a penny stock and you make a discovery, right, the transition there, you have to understand, a company pre-discovery basically has nothing. All their geologists' dreams are worth what any dreams are, right? They have nothing. Even the cash scarcely counts as an asset because that cash was raised on the premise of literally pouring it into holes in the ground, hoping to find something that has value. So that cash is an obligation to be spent. So you have nothing. So you go from having nothing to having a discovery. Whatever the value of that discovery is, mathematically something is almost infinitely greater than nothing. And that's where the 10 baggers come from. That's where the 100 baggers can come from. Now, of course, they don't all do that. They don't make a discovery. So you have to understand that the farther down the food chain you go, from profitable production to questionable production, to building a mine, to developing a deposit, to looking for a deposit, the greater your risk goes. But the greater the rewards can be. At the end of the day, though, when a mania is going, if that happens, you don't have to try to predict the mania. But when you see that one of those is kicking off, anything with silver in its name is likely to run to some degree. Personally, I prefer to put my money in a company I believe in, not just that it has silver in the name. But when the market goes manic, that rising tide does tend to lift just about every boat.
Yeah, it sure does, and that's perhaps why it's almost a decade now or over a decade that I've been following the precious metals, and seems like the setup for that situation is in place. Again, I appreciate, and we'll link to the newsletter that you write so folks can find out which companies are worth looking at and the dynamics of some of these, which is important, as you stated. Although one last question before we wrap up. I hear a lot of folks mention how with the current environment we're in, where there's a lot of the bigger companies looking for smaller companies to take over because it's not as easy to find deposits. Do you see that we're in a takeover environment and that will continue, or where does that stand?
Yeah, no. The short answer would be no, not yet. But I think we're headed there. And the reason why is there's a lot of digestion going on right now in this, M&A part of the market. The two or the four biggest companies just merged and became the two biggest companies. And those guys aren't really looking to buy anything right now. They're digesting the assets they've got. They're rationalizing their portfolios. They're going to be selling off anything, 80-20 rule, right? They're going to be chopping off the bottom 20% of performers or that they have least confidence in, which could actually be a terrific opportunity for some of the smaller companies that could pick up an asset that's not good enough for the biggest gold miner in the world, but is a perfectly fine asset for a mid-tier or a smaller company. So that's the context right now. But we've just had a fantastic quarter of metals prices, really for all of Q3. Pretty much all of Q3 2019 was terrific for metals prices. So, and the companies don't typically adjust their guidance on a quarter by quarter basis. So I think most of the producers are going to beat guidance for Q3, and we're going to see that in earnings seasons coming up very soon. I think this is really significant. I think we're going to see a bunch of earnings beats in the metal sector, particularly precious metals. Sorry, not particularly, in the precious metal sector. And I think there's a good chance we'll see that at a time there's a lot of gloom and doom in mainstream and other sectors, even other resource sectors aren't going to have that same joy. So I think a lot of investors could, suddenly start paying attention. I think a lot of robots, the algos, could suddenly, chasing alpha say, oh, wait, here's a sector that's outperforming. So we could see a lot of investor interest rushing into this space after the Q3 earnings come out, both in the metals and in the broader markets. And that could then lead to this takeover thing. Once you start having more interest, you start having more project finance, you have more access to capital, then it's easier to make deals. And the increased interest, when the sector heats up, that's when management starts going out shopping. I personally, for the producers, I'd rather that they cleaned up their balance sheet. They really took advantage of the higher prices to put the company on a steadier, stronger growth path going forward. But history tells us that, they're going to go shopping. So I'm pretty bullish on the takeover front for 2020. And the good news is that it's pretty easy to identify takeover targets. It's pretty well established what the bigger companies like. I don't have a number that I can give you, but I know that in my past and over the past 15 years I've been doing this, I have spotted dozens of high-profile takeover targets before that happened. And that makes for a great liquidity event for people who get in before it.
Yeah, it sure is going to be exciting whenever the prices finally start to move. I know it's been a long wait for a lot of folks. You and I have lived through that. Although I think it's just going to be exciting, especially if you have gold and silver soaring and the massive stock bubble bursting. Should that occur at the same time, which may or may not happen, but you just think of all that money, if it's flown out of a bond bubble, flowing out of a real estate bubble, flowing out of stock bubble into some of these.
In there, Chris, actually, that's really important. I know you're trying to wrap up, but let me jump on that because I think that's really important. I mean, before 2008, that may or may not have been true. I mean, you had a whole generation of financial professionals that, bought the Warren Buffett idea that gold is useless, yes. Or the barbaric relic idea, right? People, we're not, there's no gold standard. We don't need gold. It was just this strange thing that gold bugs worried about. But after 2008, when nothing else could get a bid, and gold did, and gold finished 2008 up. It was the only thing besides T-bills that was up for 2008. And then it took off 2009, 2010. I mean, the fantastic rally that precious metals and related equities experienced after the crash and before the broader markets came back left all these mainstream investors looking at the gold sector or the precious metal sector saying, boy, I wish I had a piece of that. This is recent and very painful memory. These people are still in the market and they remember this. And you can see it. You look at the talking heads on financial media, even the Yahoo Finance guys who love nothing better than to talk about FANGs. They chart gold and even silver. Their technical guy charts silver sometimes on Yahoo Finance. Blows me away. And you look at Market Watch, you look at any of the news things, and they will include gold when they talk about, oh, what's up or what's down. Gold is in there now. It wasn't in the conversation before at all. Now it's very much a key part of the conversation. And just to wrap this up, this year, really since the fall of last year, 2018, we have seen a very direct inverse relationship between general stock market performance, the Dow, the S&P, the Russell, the broader indices, and gold. And just today, as you and I speak, I don't know when this gets published, but on Tuesday, October 8th, markets are tanking, gold's up. Or we've seen the obvious, we've seen the opposite. Markets will be up, gold will be down. So if you're right about bad news in the markets, and I think the earnings coming out could be part of that, then that's actually very bullish for precious metals. There's one more thing. This is, I think, new. This is something that people need to understand. This is different from before. People understand and think about gold now who couldn't have cared less about it before, and that's important.
And I'd say that you deserve some of the credit for that because it's folks like you that I've been reading and watching and listening and learning from for years. So I really do appreciate what you've done. And for all the folks who are listening, you have a great newsletter. It comes across the knowledge you have, not just about the commodities, but the stocks and how they'll react. So we have the link to that below. And folks, I highly recommend checking that out. And again, perhaps just you can mention the website as well. I know you also have the free blog for people who just want to get started there as well.
Yeah, well, thank you very much. I appreciate that greatly. It is independentspeculator.com. As Chris says, there is a free blog, and we put out a weekly email, which does contain original analysis and research that's not published anywhere else. And it's no spam. I promise you that if you sign up for that, you get one weekly email, not a flood of spam every day. if there's something special happens or there's a problem, you know, an error or something, I may send out an extra email or something. I think that's happened 3 times in the year and a half I've been in business. I really respect people's time. I don't want to waste it. Either you want to do business with me or not, you know, so we don't spam our readers.
Well, I love the columns that you get. I love what you've shared today. And thanks again. We'll look forward to having you on. Again, it's already been over a year since last time, or close to a year. We'll make that sooner next time in either case. So thanks again, Louis, and I'll look forward to catching up with you again soon.
Thank you, Chris. Have a great one.